Good morning, good afternoon, good evening. It's your boy Gary Scott, aka the Solid Pip Assassin. And today, guys, I'm just going to be breaking down, right, the method of the market, which I like to use to simplify my trading style, right? I call it the power of three, right? The power of three. So I want everybody to understand that you have three trends. You have uptrends, downtrends, and sideways moving markets, right? Daily. A lot of people like to call it a ranging market. Some people like to call it consolidation, right? But the market moves in three types of trends. All right. I want everybody to understand that. Three types of trends: uptrend, downtrend, sideways moving market, right? In an uptrend, there should be the only thing that we should be doing, right? And I'm going to repeat myself. I say the same things over and over again, right? Um, say the same things over and over again because the market repeats itself over and over again, right? So uptrends, we want to be buying and we only want to be buying. We do not want to be selling inside of an uptrend, right? That's complete asinine, right? That's going to put you in a position where you're going to be one going against the grain, right? You're going against the grain, you're going against the trend, right? And it's going to lead until you doing right the complete opposite of what you should be doing. All right. So in an uptrend, we should only be looking to buy, right? Where are the areas that we should be buying from, right? The only areas that you should be buying from, what is, sorry, the only areas you should be buying from, right, are areas of value, right? What are our areas of value? You have an order block, you have a fair value gap, and you have a structure zones, right? Those are your three areas of value. All right, I'm gonna mark them down right here. You have your structure level, all right, which is STR. Then you have your fair value gap level, right? I'm going to break down each of these zones that I'm showing you guys, right? So then you also have a what? An order block zone, right? Every time price decides after it creates a new high and it decides to pull back, it's always going to come back to one of these three levels. All right, write that down. If you have a notebook, right? If you need to take a picture, right? Whatever it is that you need to do in order to remember this, right? That price is always going to come back to one of these three levels when it decides to retest, right? It's always going to come back to a structure level, a fair value gap zone, and an order block. All right. So if we're moving in an uptrend, right, and price decides to break this structural high here, right? If it decides to break this structural high, this is letting us know that structure has been broken, right? Which gives us our break of structure, BOS. All right. Once it gives you your BOS and price creates that new high, right? When price decides to pull back, it's always going to come back to one of these three levels. So, for example, let's say, right, let's say price came right back to a order block. All right. Let's say price came right back to an order block, right? An order block is the last down candle before price broke structure. So it's going to be the last deepest down candle before price actually broke above structure. All right. So when it decides to come back to this level, right? One or two things are going to happen, right? It's either going to continuously close above this level, price is going to continuously close above this order block zone, all right? In or it may either close below. If it closes below, that means price is more than likely looking to what? Fall to the downside. Okay. But if it continuously respects this order block, right? For example, what type of pattern do we see here at this order block, right? You see prices continuously closing above, not once, not twice, but three times. So, what type of pattern do we have here? Right? We have a triple bottom, right? You have a triple bottom being respected at an order block zone, right? Which is identifying that price wants to continuously move to the upside, right? It wants to continue to move to the upside. All right. That's what the pattern is for. You have patterns that start an uptrend, right? And then you have patterns that are within an uptrend, right? That can show you continuation for price to continue to move to the upside. All right. So, and many times price could most definitely make a triple bottom to start this uptrend, right? And it can also even sometimes create a triple bottom that's within an uptrend. So it's showing you that price wants to continuously move where? To the upside. So, right? In many cases, sometimes price can create something that we like to call a double bottom, right? Price comes here, stops at this level, shoots up, comes back down, and then price takes off, right? And then after it creates its new high, when it decides to retest, right? It can retest near a what? A fair value gap zone, right? Let's draw this zone out. If price came right back here, right? We can say price had reached, right? We can say price reached a fair value gap level. And because it did so, right? We want to see what? We want to see price continuously close above this fair value gap zone. Once it does that, right? We want to see bullish candles closing above our areas of value. And we're aiming to go back above these highs, right? Everybody understand that, right? Does everybody got that? Right, good, right? So once we get this bullish candle closing above this area of value, we're aiming to go back above these highs. All right. Once it creates this new high, it's deciding to do what? Come back to an area of value, right? Before price broke structure, right? It has to come back to an area of value before price broke structure. All right. With it doing so, can anybody tell me what pattern this is right here? Right. We just went over it, but I want you guys to tell me what pattern this is here. All right. Really quickly. What type of pattern do we have here? All right. Triple bottom. Great. Right. We got a triple bottom at an area of value, which is an order block. Right. And it continuously closed above this level. All right. Three times. So we want to find areas that we can buy from. The areas that we are buying from are, again, are our areas of value, right? The moment that price goes and takes out this previous high that was created, which actually gives us our break of structure, right? BOS, right? What are we looking for price to do? Create its new high, and then it's deciding to retest where? Back to one of our three areas of value. If we look at what price stopped at, right? Can anybody tell me where price actually stopped, right? Can anybody tell me what price decided to stop here? Let's see if we understand and we notice where price decided to stop. Let's see if somebody figured it out. Can anybody? Let's see. We got a few people on the call here, right? Can anybody tell me where price actually decided to stop at? Right? STR, structure. Price decided to stop at a structural level, right? Now, I'm going over these examples like this, right? Because after I'm done with this, we're going to go and actually look at an uptrending market in real time, right? And you're going to see how all of these things that I'm breaking down to you right now it comes into play. All right. So when price creates that high, when it decides to retest, it stopped where? It stopped at a structural level, right? So if it stops at a structural level, and how do you know that that level is valued is because price is not going to close below. It's going to continuously respect this level, right? And then it's going to close above it. It's going to give you a bullish candle that it closes above, all right? Everybody got that. All right? So you got your triple bottom, right? Right here. You have your double bottom here. Can anybody tell me what pattern we have here? right? Let's see. Anybody tell me what pattern we have here? All right, you got your double bottom, your triple bottom, and then you have your what? Upside down head and shoulders, which is an inverted head and shoulders pattern, right? An inverted head and shoulders pattern, right? So this could be very much so, bring this down just a little bit, right? An uptrend can start at an area of value, right? An uptrend can start at an area of value, which more than likely either be structure, an order block, or even a fair value gap zone at the bottom, right? In order for price to move to the upside. So you have your shoulder, your head, and your shoulder, right? If you think about it, if you place your head on the ground and your back on the wall, where are your feet? Your feet are in the sky, right? So if your feet are in the sky, right, that's showing you, right, the path that price wants to head. All right. So you have your inverted head and shoulders. Price starts the uptrend, right? Creates the new high, decides to retest. Price breaks the structure, creates a new high, decides to retest, right? Following along, decides to break structure, creates a new high, decides to retest, so on and so forth, right? Everybody got that? All right, good. Now, right now, let's go and look at an uptrending market. All right, let's go take a look at an uptrending market right here, right? Can anybody tell me, all right, can anybody tell me what type of market we have right here? All right, inside of this zone, what type of market do we have here? I want to see if you guys pick this up. All right, all right. We have a sideways moving market. The market truly doesn't have any directional bias or where it wants to head, right? No true directional bias or where it wants to go. But can you guys tell me, in the midst of it creating this sideways moving market, what type of pattern do we actually have here? Right? Based off of the three patterns that I gave you, right? What pattern is this one? We're gonna see if you guys can pick this up. Right? We're gonna see if you guys can pick this up really quick, right? What type of pattern do we have here? Right? One, two, three, right? One, two, three. What type of pattern do we have? Based off of what I just explained to you guys, right? You have a triple bottom. There we go, right? A triple bottom, right? And it stopped at the same level how many times? Three times, right? We know that this is a magnetized level in the market based off of what price is showing us, right? This is a structural level. Price stopped there multiple times, right? And if it's doing that, what then we want to see is price break a structural level. All right. We see how price stops here, comes down, stops here, comes down, stops here, comes down, right? What do we notice about this? Right? Let's take this away for a second. What do we notice about this? It's making consistent what? Lower highs, right? Lower high, lower high, lower high. All right. And in the midst of it creating these lower highs, it created a triple bottom, right? So, how are we able to identify which true direction this trade is going to go in? We want to see price take out this last lower high. All right. The moment that price actually takes out this last lower high, right, gives us our what? Our break of structure, right? It gives us our break of structure, right? At that very moment, after it breaks this lower high and it creates this new high here, right? When price decides to retest, what areas is price looking to come to, right? I gave you the three areas. Can you guys name the three areas? Type them up, everybody. I want everybody to type them up right now. What are the three levels, right? Type them up. And I'm not going to move on until everybody types them. So everybody needs to type them. Jaylene is on it. Kaden is on it. All right, Andre got it. So that means we're missing four more. All right, three more. All right, we're missing three more. I'm not going to move on until everybody types it up, right? I need everybody involved. I need everybody being connected with the session, right? This is how you learn, right? I love to interact with you guys in order so that way you guys can pick this up as quickly as possible. All right. So we're missing two. I mean, three. All right. We're missing three. Actually, missing four. Um, Miss Debbie, Andre already answered. All right. Ella didn't answer. Tunde didn't answer. All right. So for those that did answer, all right, and that's being a part and that's a participating. All right. I appreciate you guys. All right. So you got your new high that was created here, right? When price decided to retest, can anybody tell me what level it decided to retest to? All right. Remember, for an order block in an uptrend, right? It's the last deepest down candle before price break structure for a fair value gap, right? Let's zoom in just for a second. For a fair value gap, let me show you what a fair value gap looks like. All right, in a bullish uptrend. A fair value gap looks like this. So you see how this candle has a wick, this candle has a wick, but there's space in between the body of this candle, right? That is what a fair value gap is, right? So from here to here gives you your fair value gap. All right. We see how price react off of this level, right? That's a fair value gap. All right. That's how you're able to identify a fair value gap. Now, when price decided to retest down here, right? Ella said it was an order block. All right. That price retested to. She said it was an order block. Unfortunately, that's incorrect. All right. There you go, Jaylene. It is a structural level that price decided to retest to, right? Well, Gary, where's that structural level? Right? Where's that structural level? It's right here. All right. These wicks still come into play, and they're very much so a factor. All right. Because from wick to body, right? And when the moment we drag price across, right, that gives us our structural level. All right. That gives us our structural level, right? Because price stopped here, pulled back, and decided to push back above this structural point. So when price decided to retest, it came right back to this level. So great job, Jalen. All right, great job. It came right back to a structural level. And then what happened to price? Price gave you a fake out and it closed above your structural level. Price came back down. And what did it do? It continuously closed back above it again, right? So if we're seeing this in real time, right, you can enter off of this because this is what we like to call price action, right? Or you can wait for price to respect this level once more, right? Ideally, this is the ideal situation that you would want to attack this trade in. The moment that you see price close below here and then you see it eventually close back above, no matter the time frame, no matter the pair, right? If you follow the method in itself, it does not matter the time frame and it does not matter the pair, as long as you follow the method in itself, right? Break of structure creates the new high, pulls back to an area of value. That it did, right? So we naturally, off of price action based, we would want to enter after that candle closes, right? Where do you want to have your SL? You want to have your SL beneath your area of value, okay? Beneath your area of value. Where are you looking to attack the market? Where are you looking for price to actually go? You're looking for price to go and attack that previous high that it created, correct? Right? We can go near it, we can go a little bit above it, or we can go past it, right? In this case, we simply just want to go where? We simply just want to go to it, right? And if you guys see here, this gives us a great 1 to 2 risk to reward ratio, right? Price moved into profit, price came back down into drawdown, right? And then it eventually took off and eventually hit your take profit, right? Do we see that? Right? Everybody see that, right? Came right back to a structural level. Price went into profit, came down into drawdown, and then eventually went to go take out your take profit. All right. Now, is every trade that you get in going to go straight into profit? I like to be very realistic when I'm teaching, right? Because I'm very realistic when I hop on the charts and I trade, right? And even when I send signals to you guys, right? For the very trades that I actually are in myself, right? I like to be very, very, very realistic, right? You have people that'll be like, oh, every time you get into a trade, it's going to go into profit. That's a lie, right? It's not going to happen all the time. Sometimes you may deal with drawdown the moment you enter a trade, right? The very moment you enter a trade, right? But if you trust the method, if you trust your analysis, right? No matter if it moves into drawdown, you have enough patience to withhold, right? To take the trade in your direction. All right. So boom, that's example number one, right? Let's erase that. We see that price broke structure here, right? I'm going to delete this. That might be in that trade right now. All right. What ends up happening? Price ends up breaking structure, right? Boom. The moment that price broke structure here, right? Let's take away this zone, right? What end up happening? Give me 1 second. Right? What ends up happening? Price breaks structure. It eventually goes and takes out this previous high, right? When it takes out that previous high, what does price do? It falls right back down to another structural zone. All right. From wicks to body, right, is a structural zone. If we drag it across, right, what ends up happening to price? It comes right back to structure, right? And then all we see is a bullish candlestick close above this level. So because that happens, right, where do you think we need to enter from? We're entering after this candle closes with our SLs beneath our structural level, and we're aiming right back above these highs. So everybody got that. Everybody see that, right? Now, if that's making sense, if it's making sense thus far, right? type of PO3 in the chat. PO3. If it's making sense, type of PO3. If you have questions, if you have a question, just make sure you type a one, and then I'll make sure I answer that question. Right? Write your question down. Right? Write your question down, and then I'll make sure I get to it at the end of the call. Right? But if it's making sense, type a PO3 in the chat. Right? What ends up happening in the price? Right? Price breaks structure. Ultimately, price decides to create a new high. It decides to retest. And then what happens? You get your bullish candle closing above your structural level. All right. Let's erase this, erase this, right? And when you're doing this, guys, understand it's always going to set you it's always going to set you up to have a great risk to reward ratio. I'm gonna say that. You guys been seeing me say that continuously over and over again, right? Over and over again. It's going to give you a great risk to reward ratio. That's the key of you staying in this industry a very long time, right? Risk to reward is what's going to keep you in this game for a very long time. All right. So we enter the market, right, off of the rejections and the bullish candle closing above our area of value. That was a vague kind of question, Shay. Can you please elaborate on that? I want you to elaborate on what can I go over exactly, so that way I know what exactly that I need to go over, so that way I can break it down perfectly for you, so that way you can understand. All right. So make sure you type your actual question inside of the chat. All right. So what ends up happening in the price? It ends up breaking structure, right? Right. This is a structural high. What ends up happening? Price breaks that level, right? It eventually creates a new high, right? It eventually creates a new high. Where does price decides to retest, right? Where does price retest? Can anybody tell me, right? There we go. Y'all are on it, man. Good job, Ella. Good job, Kaden. Right? Boom, boom. Right? This is an entire fair value gap. Right? Do I have to go all the way up here? No, I don't have to go all the way up here. I can simply stop here because this is where the wick stop, and then this wick stops here, which leaves a gap within this area right here, right? Which gives me my fair value gap zone, right? What ends up happening to price? Now, price respects this fair value gap, but is it actually an ideal level for price to actually stop? Is it actually ideal? Can anybody tell me, is this an ideal level? Is this an ideal level of where you would actually possibly want to actually enter this trade? And if it isn't, I want you to tell me why, right? If it isn't, I want you to tell me why, right? Type up why, or you can even unmute yourself right now, right? And I want you to tell me why it isn't an ideal level. Not the strongest, no true retest, right? It's no true retest. And why? Good job, right? Good job, B and Ella at the same time, really, because we want price to come back to where either the structural level where it actually breaks structure, or we want price to come back to the deepest area of value, right? Before price actually broke structure. All right. I'm gonna say that again. The reason why this isn't ideal, and sometimes you're going to have to pass up on trades, right? Even if it comes back to an area of value like it did here. These are times where you're going to actually have to back out of these trades and not take them, right? Because it doesn't give you a deep pullback, right? From the original break of structure, right? What we want to see is price actually pull back either to the structural level, or we want to see price pull back to an area of value, right? Before price actually broke structure. So that's where we actually want to see price retest to, right? So we see how price is actually falling down right now, right? We have a structural level here, but also within this structural level, what do you end up having, right? From wick to bodies is our structural level, right? What also plays a factor right here, right? What's also near this or inside of this structural level, all right? Ella says a fair value gap. Jaylene says a fair value gap, right? Excuse me. That is correct. It's a fair value gap within a structural zone, which gives you two key areas, right, where you can base price actually coming to, right? Fair value gap lies within a structural level. So we want to see, right? We want to see price continuously respect these two zones, right? Do I have to have this zone here? No, because you already know that there's a fair value gap right here. So it's no even need to even draw both of the zones there, right? It's no need. No need whatsoever. Now, could price come below this level? It most definitely could because there's also a what here. Can anybody tell me what's also beneath this structural zone? Right? Can anybody tell me exactly an order block? Right? An OB. Great job. And that order block is right here. Right? The last down candle before price actually breaks structure. Right? So if price does decide to break below this structural zone, right, we know that price is potentially going to head to this order block. And all we want to see from this point on is price closing above these two levels, right? We want to see price closing above these two levels. Okay. So let's erase that fair value gap. That's not an ideal zone that we would want to see price pull back to, right? So boom, boom. You have your two areas that you want to see price pull back to, right? For initially price to actually come back above this previous high. All right, everybody understand that. All right, let's go find another example, right, for an uptrend, right? Give me just a second. We're going to find another um right uptrend here. 1 second. I want to find a pretty decent one, right? We can even go to a different pair, right? We can go to a different pair. And I will show you that it works the exact same way every time. Can anybody tell me which trend this is right here? Right? What trend do we have here? An uptrend. Yes, if you got two levels within each other, that's way more stronger than just one level by itself, right? That's what that is. All right. So we see that we're in an uptrend. There should be no reason we should be looking for sales whatsoever, right? Because what do you have here? You have a higher low at this point, right? You have a higher low here, right? These structural zones, I mean, these structural highs, higher lows are not being broken. You have a higher low here, right? You naturally have another higher low at this point here, so on and so forth, right? How are we able to identify that this price wants to move in an uptrend, right? This is a sideways moving market here. This is a sideways moving market, right? Let me change the color of this, right? This is a sideways moving market, okay? The moment that price actually breaks this level of structure here is the moment that price is looking to head where? To the upside. And that's letting us know that we are moving in an uptrend, right? So the moment that price creates this original high here, right, and it decides to retest, I want everybody to know that there is what type of area of value do we have that price actually stopped at here, right? And it stops at two levels. It stops at two levels. And I want you guys to name the two levels that price actually stopped when it came back here. Right? There we go. Good job, Caden. It stopped at a structural level and it also stopped at an order block. Right? The order block that it stopped at is right here. Right? It stopped right here. Right? This entire selling candle is an order block. Right? Boom, boom. The structural level is also right here. All right? Boom, boom. That's your structural zone. 1 second. Right? From wick to body. Drag this across. Right? We see how price respects that level. It gives you a fake out. Right? And then initially it breaks above structure. All right? Everybody got that, right? Good. And I'm going to mark that off as such. So you got your structural level here, right? Price is respecting this order block ultimately, right? We can take away this structural zone, right? Because once price got back to this level, all we need to see is a bullish candle close above our order block zone. That's all we need to see, right? So the moment we get a candle that closes above is the moment that we could potentially take our entry with our SLs beneath our order block. And then now we're looking to aim towards the highs, right? Do we have to carry it all the way back above here? No, you do not, right? You can simply go for a 1-to-1, right? This is a clean 1-to-1 risk reward ratio, or you can go for a 1-to-2, right? A 1-to-2, or you can simply go for a 1-to-3, right? Boom. 1-to-3. Risk to reward 3. All right. 1-to-3. And as you see, right, what ends up happening in the price? It goes into drawdown a little bit. It initially goes into profit, falls right back down near entry, right? Respects this order block. And then what happens to price? It eventually takes off, right? And even in the midst of it taking off, right, and respecting the trend in itself, right, what ends up happening? It breaks structure here, right? So because it breaks structure here, right? You got your BOS, right? Creates that new high. What does price actually retest to? Right? Right back to this same order block zone, right? It gives you the big rejection. And then price does what? Continuously close above and gives you bullish candlesticks. So naturally, what would end up happening? You can either enter off of this bullish candlestick that closes, right? Or you can wait, right, to get a little bit more confirmation. What did price end up creating here? Can anybody tell me what did price end up creating here? If you can visually see this, right? You have to train your eyes to visually see this, right? It gives you an order block. I mean, not an order block. It gives you a double bottom, right? It gives you a double bottom here. What ends up happening to price? You can enter. SLs will be beneath your order block, and then you're aiming towards your highs, right? You got that, right? And eventually, what ends up happening to price? It takes out your previous high that was created, right? Giving you your break of structure, right? Whether it's closing above with the candlesticks actually closing above the zone, or whether it wicks out, right? A wick out or a body closing above this structural high, it's still considered a break of structure. I want you guys to understand that. All right. It's still considered a break of structure. Does it have to close fully above? No, it can even wick above the previous high to indicate that this price actually broke structure. All right. So once that happens, where does price actually retest to? Right? If we zoom in, right, this is the last down candle before price actually broke structure, right? It came right back to an order block, right? What's above this order block? I want somebody to identify what's above this order block, right? Remember how I told you what order blocks actually benefit more than the other ones, right? The other order blocks that benefit more than just a regular order block is having a fair value gap right above it. All right. If there's a fair value gap right above the order block, right, this shows that this order block is extremely significant, right? Because you have a fair value gap right here, right? Does everybody see this fair value gap, right? Right above this order block, right? From here to here, you have a fair value gap right above an order block, which shows major significance in that order block. All right. What ends up happening? Price respects this order block, but it also even respects this what? This zone, this fair value gap zone. So you could have simply entered the market, right, off of this fair value gap zone, enter here, or you could have wait for the rejection to come, right, and enter here. So you have two areas you could have entered the market from, right? Your SL would have been beneath your what? Areas of value, right? Because if price does happen to break below that area, these areas of value, right? What's going to happen? Price is more than likely going to continue to fall to the downside. All right. But because you entered off of the rejection of this fair value gap zone, right? You take your entry, right? Your SL could have been beneath your order block ultimately, and then you're aiming back above your highs. Everybody got that, right? Is that making sense? If it's making sense, type a PO3 in the chat. All right. Andre, you following along? Is everything making sense, brother? Miss Debbie, B. All right, good. So there you have it. You end up getting the break of structure again. What is price after it creates this high? What does price actually come back to? Right? What does price actually come back to when it breaks these two highs? Right? There's a fair value gap zone, but there's also a structure. So if you said fair value gap or structure, you are correct, right? Because it came right back to it came right back to those levels, right? Right back to one of those three levels. So you have your structural level, right? And then you also have your fair value gap zone right here, right? Price came right back to those levels. Boom, boom, right? Look at that. Fair value gap zone reacted off of it, right? It reacted off the fair value gap zone, but it also reacted off of this structure level. So the moment that that happened is the moment that we could have caught our entry here with our SLs beneath our area of value, right? And we're aiming towards the highs, right? We're aiming towards the highs. Everybody got that. And we see how strong this zone stayed intact, right? These two zones stayed intact because price came here. We got our entry again. You would want to go for a 1-to-1 at times. Sometimes you may want to go for a 1-to-2, or you can simply aim towards the highs. All right. All right. So whatever your SL is needs to be your take profit for your 1-to-1, right? So if your SL is just say 50 pips, your first take profit needs to be 50 pips, right? If you want to go for a 1-to-2, right? A 1-to-2 is a 50 pip SL for a 100 pip take profit. All right. Because 50 plus 50 is 100, correct? All right. Take your entry, go for your 1-to-1 or your 1-to-2, right? Or aim towards your highs and then have your SLs beneath your areas of value. All right, everybody got that. All right, and you see how you could capitalize off of that. Now, I went over that. Now let's go over, right? Let's go over the same things, but flip-flopped, right? And then we're gonna wrap up the session. I'm gonna answer questions that you guys may have. All right, we're gonna go over a Q&A, and then we're gonna move and wait till Friday because that's gonna be our next call, right? So let's go and let's invert the screen for a second, right? Because whatever happens on one side can potentially happen on the next. Is it going to be identical? It may not be, right? Could it be identical? It may not be, but it very much so could be, right? So you have here is your what? You have a head and shoulders pattern, you have a triple top, and then you have a double top. All right. These are the three key patterns that you would actually see in the market consistently. All right. In head and shoulders, triple top, double top. All right. And again, your order blocks, your fair value gap zones, and then your structural levels. All right. So just as if it was taking out a high and it was giving you the BOS, now it's taking out a lower low. So when price takes out a lower low, it's going to create a new low for then price to retest back to an area of value, right? Before price actually broke structure. So what do we have here? An order block. At this order block, what did price create? Right? What did price create inside of this in within this move? Right? What pattern is this here? Pay very close attention to what it is, right? Very close attention. Can anybody tell me what this pattern is? Out of these three, what is this one? Right? Head and shoulders. That we have it. Head and shoulders. Shoulder, head, shoulder. What do we want to see? We want to see price continuously close beneath this area of value, right? Which means we want to see bearish candles now closing beneath our areas of value, right? What ends up happening? Price falls, takes out that previous low that was created, giving you your break of structure, right? Creating that new low. And when price decided to retest, what did it come and retest to? It came and retested the neckline, right? It came and retested the neckline of the head and shoulders pattern, right? So when it comes here, we want to see bearish candlesticks close beneath this structural level, right? So it'll look something like this. You see, you enter off of, I'm sorry, right? You enter off of your candlestick closing above, closing below, right? SL is above your area of value. And then we're aiming towards the lows, right? Right? We got that? And that's how it would look. Just as an example, that's how you would actually be looking to attack this market, right? Off of these areas of value. We want to see bearish candlesticks close beneath it, right? And our SLs will be above that level. All right. Our SLs will be above our areas of value now. Instead of below, it'll be above. All right. So everybody got that, right? That's a brief example of what a downtrend would look like in the areas that we want price to come back to, right? So now I'm going to break down what a bearish order block looks like and what a bearish fair value gap looks like, right? But structure will still kind of be the same. All right. So now let's actually go and I'm gonna invert the screen back to where it actually was, right? And we're actually going to go and look. All right, give me just a second. We're going to go look, let's just say at a random pair, right? Let's go and look at USD CAD, right? Let's go look at USD CAD for a second, right? Just to show you that this method works on every single pair, right? Now let's go find, I'm not going to say it, right? We went over the uptrend, right? We went over the uptrend. Can anybody tell me what trend this is here, right? And what should we be doing in a downtrend? right? What should we be doing in a downtrend? We should be selling. We should be selling, and that's the only thing we're doing. We're not doing anything more. We're not doing anything less. We're only selling in a downtrending market. All right. Right. How are you able to identify that a downtrending market is about to start? Right? You're able to identify that a downtrending market is about to start when it takes out, right, a higher low. We see how this was a structural level, right? A lower low, a higher low, a higher low. What ends up happening to price? It takes out that higher low, right? That's how you're able to identify that potentially a downtrend is in effect. All right. It takes out a previous higher low that was created. Boom. Right. Now, when price decides to retest, right, what are one of the three levels that price could actually retest to? Right. Let's name all three of them. Again, all three of them. Right. Fair value gap, order block, and structure level. Right. That's it. So, what does a bearish fair value gap look like? I'm just going to give you an example. Right. What does a bearish fair value gap look like? Right. So this candle's wick does not have a wick, right? It's a very small wick. This candle has a wick, right? But there's space in between the body of this candle, right? This is what a bearish fair value gap would look like, right? From here to here, right? This gives you your bearish fair value gap. Everybody see that, right? Right? Everybody see that, right? Great. So you have a fair value gap here, right? Let's not be null and void to that, right? But what do you also have? What is the deepest, right? Remember, we want to find the deepest areas of value before price actually broke structure because that's where we actually want to take our entries from. The most deepest, right? Which one is it, right? We want to find the deepest last area of value before price actually broke structure, right? And everybody is saying the correct one. You want to find that order block. We see that price came right back to this order block, right? Right? From here to here, right? Right? It's the last up candle now before price actually breaks structure, right? That gives us our bearish order block. And if we see this and we pay very close attention to it, right? We have price rejecting off of this order block, not once, but twice, right? If I see this candle do exactly what it did here, I'm entering the market immediately, right? The moment that this candle closes, right? The moment that that candle closes is the moment that I'm taking action, right? Because boom, boom. Here, right? What end up happening? I want to have my SLs above my area of value. And then initially, where am I aiming to? You're aiming towards your low, right? Does it have to be does it have to be at this, like down here? It does not have to be, right? You can stop right here. You can stop up here. But again, you can stop at your 1 to 1. You can stop at your 1 to 2, right? Which is here. This is your 1 to 2. Or you can stop at your 1 to 3, right? It'll be completely up to you, right? But more times than not, going for a 1 to 1 is not a bad idea, right? Which is TP1 essentially. When I send a trade idea inside of the community, right? My first TP is 1 to 1s. All right. Everybody got that. So you get your 1 to 1 risk to reward ratio, right? And as you see here, what happens to price? It goes into profit, it goes into drawdown a little bit, and then it goes right back down into profit and it takes out your take profit. All right. Once you go for that 1 to 1, because you ultimately already know where price wants to head to. All right. So what ends up happening, right? Price stops here and it stops right here at an order block, ultimately, right? This is an order block. Whether you want to pay attention to it or not, this is an order block. Price stops here, decides to retest. Can anybody tell me where price decided to retest to? Right? Once it stopped here, what did it retest to? Ella said fair value gap. Caden said fair value gap. That is correct. Jaylene said fair value gap. B said fair value gap. From here to here, right, is your fair value gap zone, right? What do we end up getting? You end up getting bearish candles closing beneath your what? Your area of value. So we want to take our entry from here, right? With our SLs above our area of value. And we're aiming towards the what? We're aiming towards our lows, right? We're aiming for a 1-to-1, or we're aiming for a 1-to-2. And in most cases, we can aim for a 1-to-3 risk to reward ratio, right? So if 62, if 62 pips was your SL, what's 62 times 2? What's 62 times 3? That's the addition that you have to do. That's where math comes into play, right? For trading. That's where math comes into play. All right. And then here's another thing, right? A lot of people, right? I don't necessarily have to use, right, a Fibonacci tool in most cases, but in some cases I can, right? And I'm gonna show you how beneficial this method is in itself and how it even coincides with the Fibonacci levels, right? From the previous lower high, right? High, lower high, right? So we place our zone here, right? Our retest level is back up at this zone. And if you see here, right, these two green zones that I have right here, the 50% and the 618 is considered the money zone, right? This fair value gap lies within the money zone, right? So if it lies within the money zone, I can take my entry here, right? And I'm taking it all the way back down to the 0.27. You guys see that? And it falls exactly there. All right. That's if you were to like to use the Fibonacci tool. I don't necessarily need to. I don't just necessarily preach it, but using a Fibonacci tool can give you another sense of confirmation, and it also can give you a sense of security, right? Everybody got that, right? All right. What ends up happening to price? Price takes out our lower low, giving us the break of structure ultimately, right? What ends up happening to price? Price creates this new low. What does price retest back to? Back to a fair value gap right here, right? If you guys can see that, it's right here. From that wick to this wick, price came right back to this fair value gap zone. And what did it give you? A strong bearish candlestick, right? We enter the market and we take the trades back below the lows, right? Right? If this has made sense up until this moment, right? If this has made sense up until this moment, I need everyone to type PO3 in the chat. If you still have a question, if you still feel like you're lost, type a one. All right. But if all of this is making sense to you, right, and the way that I've explained it, if it's making sense, type a PO3 in the chat. Everybody. I need everybody. Everybody participating. Everybody. Right? Because this is the only way, right? Okay. There we go, Brody. Thanks for asking that question. What is a break? What is a BOS? A BOS is a break of structure, right? So we see how price stopped here, right? And price moved back it up in an upward direction, right? In an upwards motion. But the moment that price actually comes back and takes out that previous low that was created, that's what gives you your break of structure. So the moment that price
Got you.
closes beneath this level, that's what gives you your break of structure, right? So then from that point on, all you want to see is price create that new low and actually pull back to an area of value that it created in its previous move. All right. So that's what a break of structure is. Exactly, because of the new resistance. It creates resistance, and it also creates price stopping here, creating a new lower low so that price can retest back to one of the three areas of value. All right, which is an order block, fair value gap, or a structure level. All right, does that make sense? All right, great, great, great. So where would you have taken that sell? So if I'm seeing this, right, I get the breaker structure, and then I get this new lower low that was created, right? Once price decided to pull back, right, we have to understand that this is a structural point in the market from wicks to body, right? And we're gonna label it as such. That's a structural zone, right? Does a structural zone lies here, but there's also a fair value gap that lies before the structural zone. So if I see that price reacts off of this candlestick, I mean reacts off of this fair value gap zone, I'm taking my entry after this candle closes, and then I'm aiming towards the low. If you if you don't know where to take a trade to, right? If there's actually no low for you to aim towards, then it is not a deep one, right? When I say a deep one, if for instance you enter here, you see how short that move is from here to here. If you want to go lower than that, remember you can go for a 1 to 2 or a 1 to 3. But if you want to look for where price could actually stop, actually go look in the past on the left hand side, right? That's how you're able to identify where price could potentially head. So if you want to, like, okay, I don't know, I can't aim for the lower low. It's extremely short. The move is extremely short. Let me see if there's somewhere I can go on the backside of a trade or that I can aim for on the backside of the trade, right? So if I notice that, right, I can see on the backside of this trade there's an order block here, right? There's also a fair value gap here, right? Or you can simply aim to take out this higher low that was on the backside of this trade, right? That's it. That's how you're able to attack that. That's how you're able to know where you could potentially head, is also taking into account what happened on the backside of a trade. All right. Everybody got that. All right. That's it, guys. That's the market and how it operates in itself. I kid you not. And it does this over and over and over again. It does not matter the time frame, right? All you have to do is follow the trend within that time frame, but still take into account what's going on the higher time frames, right? Because those are the true trends. All right. So if the trends actually align, so if a 15-minute downtrend aligns with a hour or a 4 hour downtrend, then of course you need to be finding areas to sell from, right? That's it. That's how it works, guys. Right? So if I was to even go on a 15-minute time frame, because I know a lot of people like trading on smaller time frames, right? A lot of people like trading on smaller time frames. Me personally, I can, but I love trading on the higher time frames because it's less noise, right? And that's the only reason why I like doing that, because it's less noise. All right. So let's go on a smaller time frame. And you guys see how that like is giving you a bunch of noise here. Like this is a lot. For me, this is a lot, right? It's too much going on. It's too much going on. I'd rather go back and look at the 4 hour time frame, because then at that point I'm still able to identify, right, the true trend, and it's as less noise as possible. Does everybody realize that? Right? Everybody see why now I love going for the higher time frames, right? Nothing wrong with the smaller time frames, right? There's absolutely nothing wrong with the smaller time frames, right? It's easier on my eyes, right? It's easier on my eyes to see the true trend of what's really going on, right? If I'm looking at the higher time frames. Yes, I think that's where I'm confused or making it more complicated than it should be. It's really that, right? Like, I kid you not. Like, this is a what trend? Can anybody tell me what this trend is? Mind you, 1 to 1 hour time frame, right? It's a downtrend. So in that downtrend on that 1 hour time frame for that period of time, right? It's the same exact things, guys. Nothing changes. Absolutely nothing changes. You got price taken out of structural level, giving you your breaker structure. Price decides to retest. What does it retest to? Back to a fair value gap level, right? What does price actually take out? It takes out that new previous lower low that was created, right? Breaker structure creates that new low. What does price retest? Right back to a structural low from wick to body. Price stops at that structural level and eventually closes below it. We take our entry. SL is above our area of value, and we're aiming towards the lows. Everybody see that, right? Right? If you enter here, you can enter here, you can aim towards these lows, or you can look on the backside of this trade and take out this previous higher low that was created in the past, right? That's even you just looking at the smaller time frames. This is the 1 hour, right? But this is how you could still use the same method that I've already given you, right? To even still attack the market in the proper way. All right. Right? Because you don't necessarily have to carry a trade for a long time, right? You can go for short-term trends, short-term downtrends. You can go for short-term uptrends and still attack the market the same exact way using the method that I've already given you. All right. So with that being said, guys, I feel like everybody, um, I feel like everybody is understanding the method that I've given them. All right. If you do have any questions or concerns, guys, remember I'm always here for you guys. I'm always open, 24/7. Right. If you got a question, I will definitely get back to you as soon as I can. I'm not going to leave you unresponse. Like, I'm not going to not respond to you. I'm always going to answer any questions that you have. Right, all the time, right? Because I want you guys to be successful at this skill set, right? I want you guys to be extremely successful at this skill set. If you guys are successful, that means I'm successful, right? And if I'm successful, that means you're successful. We're a team, right? And as your educator, and as your educator, I am not going to stop until all of you guys are doing this by yourselves, right? I'm not going to stop. And even if you guys are eventually going to do it by yourselves, I'm still going to find a way to get you guys, right, learning this method so that way it becomes extremely simple to you. All right. Because everybody has the ability to be successful at this skill set. It's your own self that will keep you from being successful at this skill set. It's only you. It's you versus you, right? Are you going to be disciplined? Are you going to put in the time to study the method, right? What are you going to do to be successful at this skill set? Because it's all up to you. You can dictate the outcome that you want from this method. From this skill set, you can dictate what you want from it. Okay? And only you will stop you. Nobody else. And it ain't gonna be nobody else's fault. It's gonna be your fault. You need to hold yourself accountable, right? I can be your accountability partner, right? But at the end of the day, it's you that has to answer to the questions that you need to answer to. It's you that needs to figure out what you're doing wrong to figure out how to make it better, right? Consistently hopping on the calls because I'm going to consistently repeat the same things over and over again because, again, the market does that. All right. So, with that being said, guys, I appreciate you guys for hopping on. I appreciate you guys for watching, right? This recorded session. With that being said, it's your boy, Gary Scott, aka the Solid Pip Assassin, and I'm out. Peace.